We were also shooting TV commercials today, so I got a nice shirt, kind of a fun, modern shirt, and I was about to go get donuts, and Kristen goes, "Oh, you spilled coffee on your shirt." I didn't even notice, but I had huge coffee stains all over, so I had to run home, grab a new shirt. What a mess.
What a start to the day.
What a start to the day. I was like, for a Friday, this is not going very well. Do you guys have Mother Day things already bought? I have to run out today and do that too.
You young guys with families and everything, you haven't thought ahead?
I'm relying on the kids. I'm going to be like, Emma, she actually already made Katie a card, so I think that's going to have to cover it. I think she wrote a cute little card in crayons, and it says, "Love you to Mars and back." And it was a heart melter for sure.
I went out and bought my wife a card. The card I liked the most. You opened it up, and it had a video monitor in there, video screen. $11 or $12, and I put it away. But it was a neat card. It was a neat card.
Can you introduce yourself? Tell us a little bit about who you are and what you do at Royal.
I'm John Healy, and I'm the CFO. I've been here for 31 years. I'm retiring on June 1st, as you guys know. Some of my areas of responsibility include balance sheet management, forecasting, trying to figure out what the economy is doing, rate setting, accounting, payment operations, things like that.
Did you ever want to be CEO? Is that
Why would anyone want to be a CEO? Oh my gosh. I value my free time. Every night, Brandon's doing something, or every morning he's doing something. I get emails from him when he gets home about 10 o'clock in the evening. And at that time, I'm probably in bed. So, never wanted to be that.
You showed me something before the podcast. Do you want to share what you brought?
Oh, you mean my socks?
Yeah. Let's see it. Look at this, James.
Oh, wow. Donut socks.
And I asked him, I was like, were those in your drawer? Or did you go specifically to buy them? And
I've always had them.
What is your favorite donut? What best represents you as a donut?
Oh, well, I like graphics. So.
Oh, you brought props. I love it.
I brought props. So I think the best donuts in the world are sprinkled donuts from Holy Donuts. And I bought some extra to share with us.
I have not sampled Holy Donuts, but for the listenership, it's a local food truck that comes and sets up shop outside of Royal Credit Union's corporate center from time to time in the summer.
James.
And they make the donuts in the truck, right? It's sort of like from scratch. It's from scratch. It's as healthy as donut cooking can get, I would imagine, right? So,
but James, I'm so disappointed. Yeah, it's such a great story. This kid, Myron, he started the process when he was like 17. He was still in high school, and he wanted a way to pay for his college education. So he got this idea, and it just really took off. It just really took off. He's got employees now, and he's such a great kid.
A little plug for our member testimonials. We did a member video on Myron, so go to rcu.org to check that video out. Yesterday they were here, and I do have a sweets problem too, and I got a boat, and by the time I left the truck, by the time I got to the desk, they were already gone.
Because they are so warm and they just melt in your mouth. They're just awesome.
So that's your favorite donut, or is that the donut that would best describe your role in the credit union, do you think?
Well, I think the sprinkles part, I have a little bit of, touching many different areas and have a little involvement in every areas, when you're setting rates and, looking at products, things such as that.
Can you tell us what is a normal day like for you? Maybe there is no normal day. Maybe that's a loaded question.
Yeah. We're asked that a lot, because the executives always deal with all the new hires and they want to know what a normal day is. But really, there is no real normal day. We sit in a lot of different meetings, a lot of impromptu stuff. And then when something occurs that needs attention, we clear our calendars and do that. End of the month and end of the quarter, we have to prepare financial statements. So Ryan and his team does all the preparation, but then you review those. So you spend a couple of days reviewing those and creating your board report.
We've talked a little bit about the board, and maybe this is a good segue into a lot of people don't know what a credit union really is.
A credit union really operates very similar to a bank. And, we offer deposits, we offer loans, we offer checking accounts, things such as that. But the big difference between a credit union and a bank is the banks typically have stockholders, or they typically, if you've heard of a family bank before, it's just owned by a few people. So then at the end of the day, the banks then, which, it's a great operating model. There's nothing wrong with that operating model because the owners of the bank, they've got risks also. At the end of the year or whatever, they take their profits, and the profits goes to a few people generally. But a credit union, they are owned by the members. So when you open up an account at a credit union, you typically get at least a $5 savings account, and that considers you a member. So you are a owner. And when the decisions are made at a credit union, they are made first and foremost with members in mind. Now, the members elect 7 board members that represent them. So every member, every time we decide to change a rate, every one of our 200,000 members, does not vote on that. But the members elect the board of directors, and they give the executive team guidance on how they want the credit union run.
Can you tell us, the funds, do members' deposits go back out the door in the form of loans at a credit union, or is that the same as at a bank?
So it all starts with the 3 of us bringing in our money and putting into a checking account, CD, savings account, or whatever. So now we've got a pool of money. And then somebody that wants to buy a car, buy a home, something like that, they come in and they want to get a loan. So then we do the underwriting and make sure that will be paid back because our 3 accounts are funding that account. So we want that money back.
Right.
We pay us a certain rate on our deposit accounts. Then that member comes in and they get a loan, and we charge them a little bit more to cover the overhead profit, because we have to make some sort of profit and then to pay our depositors.
Sure.
It's really that simple.
We talk about profits. Where do the profits of a credit union go?
Well, as we talked about earlier, that for a bank, those profits goes to those few stockholders. At Royal, our profits are lower because since we don't have a stockholders to report to, we can pay a little bit more on our savings accounts and a little bit less on our loan accounts because that's one of the ways that we pay back to our members. But we do make a profit at the end of the day. The reason we have to make a profit at the end of the day is all businesses, all financial institutions have to have reserves, dollars set aside so in case you have a bad day or a bad year or a bad month, you've got dollars to come in and support the income that you wouldn't normally earn. And again, that protects the depositors. All of our reserves protect our depositors. So when you bring in money, that's going to be not only protected by the U.S. government, but protected by the strength and soundness of the credit union itself. I have a question.
Okay, go.
Yeah, where's Cooper? I'm really disappointed that I watched all the other podcasts and she was a lively part of this.
Yeah, that's a great question. Cooper's actually helping do some background work for one of our test drive events. So that's an event where Royal goes out into the community and helps get kids involved with hands-on financial education by pretending to be a 25-year-old young adult. Then they go through different stations and make life choices about vehicles and homes and shopping and other expenses and plan their budgets and things like that. So she's working on some of that stuff today. She couldn't be with us.
Yeah, and I've taken part in many of those, and it is the most fun time I ever have. Seeing those kids come up, and I always laugh that when they get various personas, right? So they could be single or married and with or without a child. And when that single person comes up and sits down and says they have a child, and I usually do the transportation one. And they usually sit down and say, I can't have much of a car because I've got a kid. I just love it.
Yes.
Yeah, it's a great program.
The truth is, when I was like, hey, we're gonna have John on the podcast, and she said, tell me the date because I don't want to be there.
Cooper.
So she specifically said, please make sure that I'm not there. So I don't know.
Oh,
so if you see her in the
goodness.
halls, tomorrow, I would say something to her.
Cooper, we'll talk later.
I want to talk about fees for 1 second because we're talking about profits and all that stuff. Is there stuff that credit unions could do to be more profitable but they don't do it because it's not right for the members? And how does that business model work? Is that a good model in your opinion?
A while back, there was a product that we looked at that was really kind of popular in the industry. And most financials and many credit unions offered it. And we looked at it. It would really help the bottom line. but it just wasn't the best thing for the members because it was, I don't want to say what it is because it's going to kind of give it away, but it says it's going to help a certain thing. And it really didn't help anything. It helped you recover from it, but it didn't keep it from happening. And I think a lot of people bought this service because they felt it would keep them from this bad event, and it didn't. And we passed on that. So when our members come in and ask for that, we say, well, we don't offer it, but we give them a list of places that do offer that. Yeah, we do pass up a lot. Again, the difference between a bank and a credit union is what we do for our members. And about 10 years ago, we decided that, we got to find a different way to improve our bottom line without it being on the backs of our members. So at that time, we had a lot of punitive fees. I think people will probably remember that back in the old days, you would only get 6 debit card transactions, ATM withdrawals at ATMs that weren't your own. And we charged a fee on that like everyone else did. We charged for actually check card or debit card transactions, 50 cents a piece. Because it was convenience for the members. But we realized that wasn't the right thing to do. So we looked at all of our fees and decided which ones we felt were punitive, the members shouldn't have to pay for using their own money. Now, we still have NSF fees. I mean, if you overdraw your account, there's a risk there. We do have those type of fees, but not fees just to use your money. And since we began doing that, we've reduced our fees by over $3 million a year. And if you accumulate that over the past 10 years, you're talking real money that would have went to our reserves. But we didn't think it was the right thing to do. So we do try to stay away from fees.
Yeah, that's just a great example of just giving back to the membership and, letting them use their money and putting their own money to work for them. I think that's awesome.
There's a study that was done by CUNA.
Credit Union National Association.
Right. But there was a study done, and it shows that the average credit union would save the average member $140 or so a year. That may not sound like a lot in the grand scheme of things, but if once a year you could go into your financial institution, they give you $142. That's going to mean a lot at that one time. And then you multiply that $142 by 200,000 members, you're talking real money. And that's the average credit union. I would put our financials up against many other credit unions, and I would say that we're not average. Our fees that we charge are much lower. Our rates that we charge our borrowers are less than most credit unions, and the rates that we pay our savers are more than most credit unions. So I think at Royal, that $140 or so would be much more.
Setting those rates and comparing those rates to the competition, essentially, or other credit unions is part of your day-to-day, right? So that's a very qualified opinion, I would say.
Yeah. Okay.
Right?
Yes, it is very qualified. But now, there's a thing in our industry when you're setting rates, you just go look out the window and see what everyone else is charging. And we do not do that here. We look at our financial statements. We look at the strength of our loans, where our deposits are laying, and that's where we determine our rates. For example, the Fed just increased rates, as we know, about a month and a half ago by 25 basis points. We did not increase our loan rates, our consumer loan rates at that time, but we did increase most of our deposit rates by up to 30 basis points. Some were at 10, some were 20, 25, 30. So that was spread over most of our deposit rates. So then we know that the Fed was going to, the market felt the Fed was going to increase rates yesterday, I think it was announced, or the day before. And that was highly expected. So we increased our deposit rates before that announcement was even made. So we increased them 2 times. And we get monthly rate surveys just to make sure that our rates are okay. And most financials up to that point hadn't increased theirs at all. Now our loan rates will be increasing this month because now the Fed has raised short-term rates by 75 basis points. So we will increase our loan rates some. But we'll still probably end up being more than number one.
You're going to have to slow it down a little bit for me. Why is it a good practice for us not to look at what everybody else is doing and kind of follow suit? Why is it important for us to look at inward and then go from there?
So by slow it down, you mean talk slower?
Just explain it, I think.
You could get stuck in the premise that we at Royal on our deposit side, we've got the number one rates for the most part in both of our markets, in all of our markets. So why, just looking at it from a financial standpoint, from the CFO standpoint, looking at the bottom line, why would we want to increase rates if they're already number one?
Sure.
So that's why we try not to do that. I mean, we do know where they are. I'm not saying that I did not know our rates were number one and we increased our number one rate. I knew that, but you just got to do the right thing. One of our core values is doing the right thing. And it made sense that since we knew some of our rate structure was going to change internally, why not pay that back to who? Our member owners.
Sure.
Why does the Fed increase rates? Why is that? That's called tightening. Why is the Fed tightening right now? Well, I think as we all know, the cost of gas, the cost of donuts, everything is increasing right now. Everything is going up. That's called inflation. And the cause of inflation is we have too many dollars chasing products. Let's just kind of slow it down to buy donuts.
Right.
So if when you went to the grocery store this morning and bought the donuts, if there was a line out the door, all businesses don't operate exactly like a credit union owned by our members. But if they knew that there's a line out the door to buy those donuts, they'd probably have to hire a few more people. They might have to pay overtime. And they might have the option, since there's a line out the door, instead of charging 25 cents a donut, they could get by with charging 30, 31, 32 cents. By taking that demand away from the market tends to help get inflation under control and bring the prices back. Because as you increase rates, if you want to buy your car, your rates on the car are going to go up. If the business who is making donuts, if they have to borrow money to buy their wheat and flour or whatever, then that's going to raise the price of that a little bit. So as prices go up, then people tend not to spend so much. And that's called tightening. The other side of that is when the Fed loosens or decreases short-term rates. What that does is just the opposite then. It gets things are more affordable for people, so they'll go out and buy. So then the business will hire people and bring people on, things such as that.
So the Fed raising the rates is an action that they're taking to sort of to put the brakes on the inflationary economy right now, right? Right.
They want to slow the economy down. I know it sounds hard, but they don't want people buying as much. There's always a balance of where the Fed wants us to be.
Do you see these measures that the Fed is taking as being successful in the medium term to long term?
Oh, they will be successful. The big question is there's an economic term called a soft landing. So the Fed's going to keep increasing rates. And there's a rule of thumb, they're going to have to increase them about as high as inflation. Historically, if you look back, the Fed quit increasing rates when they got to inflation, the inflation rate. And the inflation rate's running about 5% right now, and the short-term Fed rates are at 1%. So that kind of gives you a long-term view, James, of where it may end up. But that 5% is definitely coming down a little bit next year. I mean, things are already slowing a little bit. But right now, the Fed has increased 2 times by a total of 75 basis points. So now their short-term, what they call the Fed funds rate, and that's the rate that banks borrow from one another. That's kind of like their wholesale funding if they don't have enough depositors. So that rate right now is between 75 and 100 basis points. The market's anticipating that rate will be at 2.5% to 3% by the end of the year. So by the end of this year, you're looking at another 200 or so basis points of 2 full percentage points of rate increases on the short end.
So in the long term, I understand why it's needed, but in the short term, it feels painful. Like as a member or as a listener, right? Things are going to get more expensive.
Well, no, things are more expensive.
They're going to keep getting more expensive, though. Like it's going to cost more to borrow my money to do the things that I would like to do. So
it will cost the borrowers more money, for sure. But now the seniors, why'd you guys look at me when I said seniors? You both looked directly at me. But those who typically are past their borrowing stage of life and are in the saving stage of life, their returns are going to go up.
So they're going to benefit from it in the inverse way that a younger borrower.
And really, we all benefit long term, because for the last 10 to 15 years, inflation's been running around 1.5% to 2%. The Fed kept wanting to get it up to the 2% because that's the magic number for the Fed, between 2 and 2.5%. That's the magic number. And then because of COVID, because of the economy being shut down, so we're not out spending money. For those of us who are lucky enough to still have a job, we're still earning, but we're not spending because we can't spend it anywhere. Grocery stores, banks, credit unions, those are about the only things open. We're saving dollars there. So then we had the stimulus funds. I think we had 2 or 3 of those rounds. And I told my kids, I told my fellow retired people, I said, I really think this is a mistake that you guys, that we retired folks are getting stimulus funds. My kids who are earning, they are still earning, a salary. They're both lucky enough to be working. They're getting a stimulus check. They put that stimulus check in their savings account. Where many people, did need that money, and thank God it was there for them. But we put a lot of money into the economy, and then they did it again, and then they did it again. And then that's why, we talked earlier about too many dollars chasing too few goods. That's where the too many dollars came from, chasing those few goods. Because then we start to go out again. So then we start to go back to restaurants. We now go out and buy our new car. We buy our boats and whatnot. So we have this extra cash sitting in our savings accounts, which means we're going to spend more. It's going to be tough on the near term, on the borrowing side, but it always works. You will see in the next 1 to 3 years, the rates are coming down. Gas will come down. All that stuff will come down. And then it'll normalize again, and then off we go again.
There you go. Economics 101.
Yeah.
I guess that's what that felt like.
So maybe you don't want to answer this question, but what should our regular members do now? Should we still be borrowing money, or should we be kind of hunkering down and just waiting our time?
Well, I think if Grant was in here, he'd say he'd give some type of disclosure about whatever I say. I'm representing my own feelings. This is not guidance. I don't have the right titles behind my name.
Grant is Royal Credit Union's legal counsel, by the way, for the listeners.
As far as what should people do, each household's different. They have different wants and needs. As we talked about earlier, I've been here for 31 years and 15 years in this building. So I've had a pretty reasonable job over the years. But when we moved into this building, I still drove, I don't know the year, but a rusty old pickup truck. People were wondering how it would hang together, and it was worth $1,000. But it was reliable, and I've just never felt that, I wanted to save for the day that I'm going to be entering, come June 1st when I'm retired. I wanted to make sure that I had enough when I retired. So I think that people should always look at that if you can save going out to eat one time a week or a month and put that into your rainy day fund, before you know it, the rainy day fund is going to have some money in it.
Yeah, I think that's great advice, just to keep thinking about your long-term goals and plan accordingly.
Yeah, going back to that event that we have, test drive, and those students are learning that at an early age, that, if you want to have a brand new car today, then when you go to the section that, they can, do the play stuff, they don't have enough money to play. And then you go to the saving stuff, and now they're in the hole. So, every family's budget is a little bit different. It's very important to just eke a little bit away to save for the future, because that future will come regardless. So might as well do it today. So in 5 years, you've put a little bit away versus putting nothing away.
Tell me if I'm crazy, but I have kicked around the idea of getting an electric scooter, because we don't live that far from Royal. And I could get like a pretty good electric scooter and then save money on gas by just cruising to work. How do you guys feel about that?
I'm pretty sure the CFO is going to say, you already have a car that works. What are you going to do when it rains?
Okay.
Don't buy the electric scooter.
Yeah, the CFO is going to say that. What are you going to do when it rains?
Well, yes.
You can drive your car?
Half the year we're in winter. So my wife said, you have a bike. Why don't you just ride the bike?
Ooh.
Which is probably the better answer. You've been in the industry 31 years. you've seen
Here.
Yeah. You've seen so much change, I'm sure. Do you think that the credit union movement's change will be vastly different in another 31 years?
Vastly, that might be a stretch, but I think I know the credit union industry and the bank industry is going to be different in however many years that you said because of consolidation. With all the regulations that we follow, it's just tough. When I first started, all financial institutions have to file a call report. When that started, it was 4 pages long, and now it's like 100 pages long. So, I mean, that's a lot of work that goes into that once a quarter. And all the regulations. Have you guys bought a home yet?
Mm-hmm.
Yes.
Did you see that packet of papers that you signed?
Yeah.
All these compliance things. And if we don't dot every I and cross every T, that's definitely a problem. So all that stuff takes time. So the smaller banks and the smaller credit unions just don't have that compliance expertise needed to keep going on. And the other thing is that if you don't have online banking, when Chase does one of their commercials, I sit back and say, wow, little RCU has the same thing that Chase has, but all financial can't say that. So it's tough to attract new members that want instant cash, instant access to their accounts, things like that. So I think those are 2 of the 3 bigger things that's going to change the landscape out there for financial industry.
So Cooper's not here, so are you going to give the famous outro?
The famous outro, yes. So listeners should like, subscribe, follow, share, give us a review, do all that good stuff to Money Donuts.
I think
Is that not right?
Yeah, no, she does it better.
Ugh.
But
Of course she does.
don't let her listen to that part.
It would really be an honor that one of the last things I did for Royal, I was like the winner in those reviews. So please.
Yeah, if you like this episode, make sure you write a review saying how great John did on the podcast.
Thanks, guys.
Thank you.